Welcome back to the Local Loop. I'm here today with Nicholas Sarlo of Liberty Mutual Insurance. Hi, Nick. Thanks for being here.
Hey, Suzette. Thanks for having me.
Okay, great. So I have some questions for you that I'm sure many people who are out there looking to buy a house, maybe their first house, or renters would love to know. So I'm just going to shoot.
Absolutely.
Okay, so first question, what is homeowners insurance?
Homeowners insurance is the coverage for your home. For many people, that is the most valuable asset they will have in their lives, especially down in areas such as this. It's very important to make sure you know what your coverages are, you know what your home's replacement cost is, so that you have the necessary coverage in place.
Okay, but it's not required by law.
No, so technically once you have no more note on the home, you don't need to have it, but that is at your own risk. It's the same as car insurance. If you have a lien on it, you are required to protect the asset for yourself and for the lien holder.
So anybody getting a mortgage must have homeowners insurance.
Exactly.
Okay. So what does it typically cover? What kind of disasters?
So homeowners insurance covers pretty much everything but water damage. So flood insurance is another thing that is necessary if you have a mortgage, depending on where you are on the floodplain. They adjust every year. Some years you might be in it, some years you might not. That's something else you do need to carry for mortgagee purposes.
Right.
But if you don't have a mortgage on your home anymore, a lot of people in this area might have a paid off home or they just paid off in full. You are not required at that point, but it is at your own risk.
Right.
And it's definitely recommended. As you've seen with the storms that have happened, Sandy, down in Florida, a lot of people have lost everything.
And up here, Sandy
yeah.
impacted a lot of homes in Greenwich and along the coast.
Yeah, got
so
destroyed.
It's very important to have that. So will homeowners insurance replace my house if it's damaged or completely ruined by fire, etc.?
So that's a great question. So there's a number of different things to take into consideration when looking at homeowners insurance. The first, and I tell this to everyone I know, friends, family, and clients, is make sure you review it often, your homeowner's replacement cost. So you want to make sure that your home is accurately protected for its current cost. A lot of people will just go online to a no-name insurance company and they'll get the cheapest insurance they can find. The cheapest is not always the best. You want to make sure that you have 100% coverage.
Right.
I had a friend that had inadequate coverage for their home and I told him, listen, if your home burns down, you're going to get 75% of the value to rebuild your home at its current state.
Right.
That takes into account all renovations and stuff like that. So you really want to make sure you review it.
So that answers the next question of how much insurance do I actually need?
It depends on each case-by-case scenario. One home might have a replacement cost of $250,000. You want to make sure you have that. Another home, especially in this area, larger value, larger homes, might be $750,000. A lot of insurers nowadays have proprietary calculators that you'll plug in, look up the property, and it'll tell you what the replacement cost is at builder grade, at designer grade, or just at the bare minimum. And that'll give you an idea of what you need to have your home insured for properly in the case of a natural disaster, fire, or flood.
Right. I know that you just mentioned a price point of $750,000 in this area, which we know is under what the typical value is here.
Sure.
So we're not talking about what a home's value is on the market.
Sure.
We're talking about what it costs to build the home.
Exactly.
Okay. Just want to make that clarification.
Exactly. That's a great point. So down here you might have a home sell for $4 million.
Right.
That doesn't mean the home is necessarily going to cost $4 million to build.
Right.
It might cost $1.2 million or even $900,000. Again, it's a case-by-case individual scenario that allows us to go in and say that home, to build it back to its current state, if it was destroyed by fire, it'll cost $950,000, even though the market value is closer to $4.
Right.
So there is fluctuations in terms of rebuilding costs and everything. And obviously homes down here cost more because of the whole expansion up the coast.
You touched on personal property. So if I have jewelry, diamonds, is that all covered?
So most of the time it's covered in a very basic manner. To get full coverage, you would want to have it as scheduled property.
Okay.
And make us aware, or your insurer, make them aware of any individual property that is worth a specific amount. For that, typically antiques, art, jewelry, musical equipment.
Anything of value.
Yes, anything of value, essentially. You want to make sure your insurer knows that it's in the house, so if something does happen, we're ready to protect it.
Got it. Okay, great. So let's touch on life insurance, Nick. What can you tell me about that? And is it really important to have that if you have a will, for instance?
Yeah, so great question. Life insurance is something that every single person should have, even for your children. And the reason behind that is it protects you against any of life's inevitabilities, which is, again, why you have insurance in the first place.
Right.
So let's give an example of Bob, who is an investment banker in the city. And they have a really lavish lifestyle, really enjoying life, and then they have a beautiful $3 million home with a $30,000 a month mortgage.
Mm-hmm.
Let's say
Wow.
Susie is the wife, stay at home, takes care of the kids, or has a part-time job just to keep busy. What happens if he passes away suddenly out of complications or out of the blue? Who is going to be reliable for paying the mortgage?
Right.
You have to have something in place, right? You could sell all of your assets and really go into panic mode to pay for all that, or you could have a life insurance policy in place for him to make sure that should anything happen, she's protected for
Right.
life. The kids have student loans paid for or school paid for with cash. The mortgage can get paid off, so she doesn't have to worry about moving or anything like that in such a grieving time. So it really makes it worry-free for everyone, knowing that you have a plan in place.
Right.
Now that dovetails perfectly with what you said about having a will in place. Everyone should have a will, and that should complement each other.
Right. Okay. Good to know. Thanks so much, Nick, for being here. It was really informative. And reach out to Nick Sarlo at Liberty Mutual for all of your insurance needs.